Okay, I think we can go ahead and get started. First and foremost, I just want to thank all of you for taking a little bit of time out of your day to be here. Today we've got a great topic, and as you can see here, we're talking about protecting your family. More specifically, we're going to be talking about some of the basics of life insurance, and I think that after today's presentation, you'll be able to walk away with some really easy next steps that each one of you can take so that you feel confident and that you have the peace of mind that you deserve, that your family is going to be protected in the event that something were to happen to you. Again, my name is Kyle Bingham. I'm the Managing Director for Financial Fitness for Life. Joining me today are two of our financial consultants. We have Kenji Noguchi and Heath Hagen, both here with us. Here's a look at the agenda that we'd like to walk through. As you know, with our Fit for Learning webinar format, we like to go through some of the most frequently asked questions that we get as financial educators. And so for this first section, we're going to be talking a little bit more about some life insurance basics, working through what life insurance is, how it works. We're going to talk about the difference between term versus permanent. And then we're also going to talk about the cost of life insurance and how do insurance companies go about determining what the premium is that you're going to pay. And then we're going to go into tips about finding the right policy for you and your situation. And we'll kick that section off by talking about why you should consider life insurance in the first place, but then also what are some of the risks and drawbacks to life insurance. We'll talk about when the best time is to purchase life insurance. And then lastly, we'll help to walk you through how much life insurance you might actually need. And with that, we're going to go ahead and move into that first section, talking about some life insurance basics. And what I'd like to do now is turn the time over to Kenji. Kenji, can you walk us through this first question? Talk to us about what life insurance is and how does it actually work?
Life insurance, it's one of those things we've all heard about, right? And really it's something that we associate with death. So I get it, it's human nature for us to not want to think about death. And on top of that, they can be complex. So many times we avoid looking at these things and never truly understanding how they work. So let's break it down. Life insurance, it's meant to preserve our human capital or the value of our ability to earn income during our lives. So really what it is a contract between an insurance company and a policy owner. And the insurer or that insurance company guarantees to pay a sum of money when that insured person dies. So the policyholder must pay premiums for the policy to remain in force. And the policy beneficiaries will receive that policy's face value or death benefit when the actual insured person passes away. So when we think about life insurance, there really are two primary categories I want everyone here to consider, and that's going to be our term life insurance and our permanent life insurance.
Excellent. Okay, let's elaborate a little bit more on that, because I know that there are a lot of people that probably have some questions about those two primary categories. So what's the difference between term life and permanent life?
Absolutely, and that's a valid concern and question, right? So let's dive a little bit deeper here. On the left side of our screen, we're going to see our term insurance, and let's address that first. So really, term insurance provides coverage for a specified time period. It's temporary, and due to that specified time period, maybe it's 10, 20, 30 years, it's generally the more affordable option between the two types of insurances we're seeing here. It does not have any cash value within it, so typically, someone might get term insurance for a period of time, like until their kids would be adults or maybe until their house is paid off. It's almost like a Band-Aid, right? It's best used to cover those temporary needs or expenses where if something happens to us, our dependents are covered and they have that replacement of our income. So I'll really paint the picture here, right? Say a 30-year-old just bought a house, just had a newborn child. They might get a 30-year term policy, and that policy is then going to cover them from age 30 to age 60. All right. Now, when we're looking at the right side of our screen here, we're going to see our permanent life insurance characteristics. And exactly how it sounds, you have coverage for an entire lifetime. And since that coverage will insure you for the duration of your life, it's really no surprise here that it's going to be a higher cost. Now, permanent life insurance does have cash value. I know I mentioned that earlier on the term side. So what actually is cash value? Simply put, it is an investment component within the policy that can grow tax-free over the course of the policy's life. So it is a living benefit that the policyholder can use during their lifetime. Now, obviously, with that benefit, again, comes higher cost. I know it sounds enticing to have cash value within a life insurance policy, but you are going to pay significantly more in premiums to a permanent life policy than a term policy. Now, permanent insurance policies may be more advantageous for those with longer term financial planning goals, especially in regards to taxes. So versus simply looking to protect income and give a soft landing for dependents like a term policy.
Excellent. Yeah, thank you, Kenji, for kind of walking through those. And we're going to be talking more about how you can kind of start to walk through the process of determining whether term or permanent is going to be right for you. And now going back to this third question here, Kenji, how much will life insurance cost someone? And then can you also walk through how insurance companies determine those premium amounts?
Absolutely, absolutely. And I think this is what everyone really wants to know, right? How does this all work? What's the inner workings behind the scenes there? Before I dive into that, let me first start by mentioning group term insurance. So as an eligible and enrolled employee of your company, you may already be insured under group term insurance. And generally, your coverage is based off your salary or maybe even your tenure or your role at the company. It's a good benefit to have and something I want everyone here to be mindful of, especially before you explore maybe private life insurance policies. So there are some limitations to that I want you to keep in mind. Because group coverage is linked to your employment, if you change jobs, maybe stop working for a period of time, or even retire, that coverage is going to then stop. So as a simple reminder, double check what your coverage may currently be at and decide how much more will I need. Now, once you have that in consideration, insurance companies, they use a lot of factors. You have actuaries in the back scenes to really run the data and numbers to see really how should we price these things. Now, I want you to think of two categories when you think about that. So the first is going to be your demographic, right? And that's going to include your age. So younger individuals, they're often paying lower premiums. The next is your health, right? If you have better health, usually that's going to lead to lower premiums. Next one is going to be your gender. Now, women often pay slightly lower premiums than men. And the reason for that is because they have a higher life expectancy. Now, the very last thing in the demographic realm here is whether you're smoking or not. Smokers versus non-smokers. Obviously, if you're a smoker, there's inherent risk when you do so. And as a result of that, you're typically going to pay higher premiums when you search for those policies. So that's going to be our first, again, our demographics, your age, your health, your gender. Are you a smoker or a non-smoker? And on the flip side, insurance companies, they're going to factor in, what type of policy, what type of coverage are you looking for, and what do you want? So the very first thing is your coverage amount, right? Higher coverage amounts result in higher premiums. So if you want a $200,000 death benefit versus a $1 million, obviously there is going to be a change in that pricing. The next is your policy type. I know I touched on term policies and permanent policies, right? Your policy type absolutely matters. So those permanent policies tend to have higher premiums because they're going for your lifetime, whereas that term policy is maybe just those specified time periods that you're looking at. In addition to that, it's going to be looking at your term length. So, let's say if you're just looking at term policies and say, hey, Kenji, I want 10, a 20, 30-year policy. I want to look at the options, what that pricing might be. Obviously, those longer terms are going to have higher premiums for you. You want to cover yourself for longer. Now, just to kind of wrap it all together, right? What do they really look at too is your medical underwriting. So when at any time you apply for these, maybe sometimes they don't offer them, but for majority of these insurance policies, you have to go through medical exams. They're going to determine your health, high blood pressure, you name it. And that is absolutely going to be a huge factor that's going to impact your rates. So really, let's say you want a policy with $500,000 as a death benefit, right? The term policy, it could be as low as $20 a month, whereas a permanent policy might be upwards to $1,000 a month for the same benefit, right? So the takeaway here, folks, is that life insurance is definitely not one size fits all. You truly have to personalize these things to your needs and to understand, what purpose do you want to use them for? You really have to decide how it fits into your plan. And again, as a great reminder, we're here to help you folks figure those things out. So please reach out to us if you want a second thought or going through, what are these factors that they might consider when I'm looking for a policy to get in place.
Excellent. Yeah, thank you, Kenji, for that. I think you really hit the nail on the head that just like any decision that you're making with your own financial plan or your own financial situation is that it needs to be personalized. And Kenji walked through a little bit about the underwriting and some of the different factors that are considered. And, as you can imagine, everybody's going to be a little bit different. Okay. And so now what I'd like to do is we're going to kind of turn the time over to Heath now and get a little bit more into what are some of these tips or what are some of these different steps that you can take to figure out which type of policy is going to be right for you. And so Heath, let's take a look at this first question. Why should somebody consider life insurance in the first place? And then why don't you walk us through some of the risks or drawbacks that a person needs to be aware of?
Sure. Yeah. Thanks, Kyle, and thanks, Kenji. And there's going to be things that I say that kind of reinforce what Kenji just said too. But all of this is kind of connected. So, like Kenji said, sometimes life insurance is a hard topic to bring up, and nobody really wants to think about putting a monetary value on your life and your death. And it's a valuable conversation to discuss, and it is worth exploring. So. Life insurance can be an essential part of your financial plan. It provides a monetary safety net for your loved ones, in case something unexpected happens to you. And that can provide peace of mind and reduce stress, knowing that your loved ones will be financially secure in your absence. Whether that be replacing your income for a number of years or paying off debt or providing funds for college or funeral expenses, etc. Life insurance also has other benefits. Kenji touched on a little bit of this, but the tax benefit of life insurance policy, kind of one of the biggest benefits is that your beneficiary, the funds getting paid to your beneficiary are going to be tax free to them, and they don't have to report that as income. So that's kind of a burden lifted off of them as well. As with everything, where there are pros, there are also cons. And so we need to look at some of the drawbacks. And again, Kenji went over some of these things, but it can be expensive. Life insurance premiums, or depending upon the age, the health, lifestyle, type, and amount of coverage you're needing. And it might not be available for everyone. Life insurance companies, like Kenji said, using underwriting to assess the risk level. And whether or not they want to offer you a policy or not, and at what price. So they kind of control that a little bit. And it's just kind of based off of different factors and medical history and things like that. So, one policy also, might not meet the changing needs that you have throughout your life. Life insurance is not kind of a buy it now and it's going to cover everything. Your needs and goals might change over time depending on kind of your stage and financial situation. Income level is going to change, financial obligations. About a year ago, I had a young dentist come to me and get life insurance, and he had just opened up his dentist practice and just got married and just we're expecting their first child in a few months, and so we got him a policy, and he literally called me last week and says he needs to do another policy because of things have changed over time. And so, being 12 to 18 months removed from that first policy, he has to kind of go through this whole process again. So that can be a little bit cumbersome. And it might not be the best investment option that you could use with your money. And this is talking more about the whole life policies that are developing and that cash value. So some people buy whole life as a way to save money and build wealth over time. However, the whole life insurance might not be the most efficient or most effective investment tool, for several reasons. First, you have whole life insurance has high fees and commissions that kind of reduce your returns over time. Secondly, whole life insurance could have a lower rate of return compared to other investment options that are out there, such as your stocks or your bonds, mutual funds. And third, Whole life insurance has limited liquidity and flexibility, meaning that you may face penalties or taxes if you withdraw or surrender your policy. Another drawback is you might outlive the policy. This is referring more to your term. If you purchase your term, you might not ever use that death benefit, which is a good thing, but some people don't like the notion of paying for something that they might not use. I like to compare this to purchasing car insurance. We don't purchase car insurance and then go out and wreck our car just to use the policy. So we do purchase car insurance with the hope we don't ever have to use it, but it is a good thing and it's very helpful if we need it. And lastly, it might affect kind of your self-worth. This is kind of more of a subjective or psychological drawback of life insurance, but it may still be relevant for some people. Buying life insurance means, putting a value on your life and your death, which can be uncomfortable or depressing for some people to think about. It might also make you feel more anxious about leaving your family behind. So those are some drawbacks of purchasing life insurance that you should consider before making a decision, but we need to obviously weigh those against, the benefits of life insurance. So those are things you need to consider kind of when purchasing a policy.
Okay, excellent. Yeah, no, that was great to dive a little bit more into that, Heath. Why don't we take a moment and walk a person through when the best time is to purchase life insurance. So if something's happening in their life, what are some of those life events where they need to go, you know what, I need to go revisit my life insurance policies and make sure I'm properly covered?
Sure, yeah. The best time to buy life insurance is as soon as possible. That's, because the younger and healthier you are, the lower your premiums will generally be. If you're single with no children right now, life insurance might not be a high priority for you. But there are, if you do have dependents or have outstanding debts or things like that, that you would like to cover and not kind of leave that to your estate, there's some different life events that trigger kind of a revisiting of life insurance. Like buying a home. Life insurance can ensure that the co-owner of that home is not going to be responsible for paying off that mortgage. Getting married, life insurance can help your spouse, handle the debt or maintain the current lifestyle that you guys had. Having children, obviously we need to help our family cover the expenses of childcare and education. And I just looked up a stat, recently, like the current average yearly cost of a college tuition and like the living expenses per child is about $36,000 a year. I know for me, when I got married, I purchased just a basic life insurance policy to cover the mortgage. And, as we started having kids, kept adding different policies. And just recently we had our 5th child. I know I'm crazy, but currently in the process of applying for another life insurance policy, just because, just life events are changing along the way. So there's other things like opening a business or having a business. Like life insurance can help you, your business partner, kind of help keep the business going as the transition period is happening, and be able to pay employees and continue the business as is and not have a bump in that as well. And lastly, like leaving a legacy. Some people like to leave generous gifts to people or organizations. So life insurance is a good way to help your loved ones kind of go through that estate tax process, and also it increases kind of after-tax money to pass on to your heirs and loved ones. And life insurance can be used to support a charitable cause or an organization that you care about, kind of creating a lasting impact on society that way. So, anyway, it can be used for a lot of different things, but generally the younger and healthier you are is a better time to buy it.
Great. Yeah. Thank you, Heath. And I think that is a good point, that we're all going through different things in life at different points in time. And so we need to use those as good reminders, not only to revisit our financial plan, but again, to kind of go through, what our insurance coverage looks like at that particular point in time. Now, I know we're going to dive into some numbers and calculations here, and so I don't want us to get into the weeds, but can you just take a few moments and walk us through some simple ways that a person can identify how much life insurance they might need? And again, Kenji already talked about it. It needs to be personalized to each person, but like, what are some rules of thumb that the folks listening in can use?
Sure. And I want to start too, like, there's a lot of tools out there online that people can go on to purchase life insurance and do things. I would just be cautious of what you're getting yourself into. Trying to determine this on your own. You could either under or overestimate the need that you have, and so kind of reaching out to somebody who can help you walk through this process is very much advised on our part. So and I think the reason we put this slide in here is for you to kind of see behind the curtain of what a financial advisor or an insurance agent would be asking you, kind of to help determine the amount of insurance and like what kind of coverage or type of policy that you might need. So there's different methods that you can use. These are just three of kind of the most common ones that are out there. And so this income replacement rule is just what it sounds like. It is, figuring out how much income you would need to replace or how much life insurance you need to replace the income over a specific period of time. So if you're multiplying that by 10 or 12, that's essentially 10 or 12 years of your income that would be needed. And so the next two, the human life value and the DIME formula, are more comprehensive approach because they take into account just different factors and not just income itself. So human life value is taking your age, how much longer you have to work, what kind of job that you have, and are you going to be advancing your career in that, just kind of your future earnings and expenses are going to go along with that. So it's taking a lot more customized approach and getting more, making you think a little bit more into the future, and so you adding all of those things up and getting a total number of the amount of insurance that you would need. The DIME formula, takes us, just kind of goes through different things, the debt, income, mortgage, and expenses. And so taking your debt other than mortgage, whether it be your credit card debt, student loans, car payment, anything that you're going to owe or you currently owe right now, and then also taking the current and future income that you're going to be bringing in, and then taking your mortgage, or if you have a second mortgage, or if you currently have a HELOC that's on there, just being able to pay off all of those things. And also just lastly, just the education expenses. And so we mentioned college earlier being about $36,000 a year per child. But if you want to send your kids to a private school that's costing during, their either elementary or secondary education. So anyway, those all things, you kind of add up all those things and kind of figure out a base number of where to start. So all in all, life insurance can be a worthwhile investment, if you choose the right type and amount of coverage for your situation and your budget. Again, like I said, strongly recommend that you reach out to someone and to help determine the amount that's right for you and your family.
Excellent, Keith, thank you. And Kenji, thank you to you as well for walking through some of these different questions. So what can all of you do now? Well, I've laid out a couple different action steps that I think each one of you can take, after today's webinar. Start by first just understanding what some of your specific needs are. We've talked about a number of different scenarios today. Figure out what those financial goals look like for yourself, whether it's paying off debt, whether it's paying for a child's education. Everybody's going to have a little bit of a different vision of what it is that they need. And also start thinking about, are you needing permanent coverage, or do you just need temporary coverage until a certain point in the future? Because just answering that question alone can kind of help you to see what type of policy would make the most sense. And also, as you're trying to find that right policy, start to look at potentially the coverage amount that you're going to need. And it's always a good idea to sit down and walk through the details of those different policies, whether we're talking coverage period, death benefit, what does the payment schedule or the premiums look like. It's always good to make sure that you understand the basics of that policy. And also to confirm that the amount that you have, or that total coverage amount, that it is indeed going to fulfill all of those needs and those goals that you've set for yourself and for your family. And then also start to think about how you're going to be paying for that premium. Set a budget for that so that it does not come at any surprise when you have to start paying that, so that it doesn't disrupt your budget. And also make sure that as you're going through the policy details, that there aren't any possible increases to those premiums, because we would need to make sure that we're very aware of those if that were to happen. And then I always encourage folks to periodically go in and review your current policies. Kenji talked about it, about going through your employer and using that as a starting point. That's a great first step. But then beyond that, look at whether or not your current coverage is going to be able to help you to reach those goals. And if it's not, then that's an opportunity where we can look at some different options. And as Heath just got done talking about, any significant life event that has occurred in your life, that should be a reminder to update your financial plan and to also take a look at your insurance coverages. And like always, what we really try to do is to be a resource for you and to be that first step that you can take. And so you can take a moment here and scan this QR code. We'd be happy to sit down and have an initial conversation with you. We take an objective, unbiased approach. We can make sure that all of your questions are getting answered. And then depending upon the specific needs that you have, we can definitely connect you to other resources. But I would encourage you to kind of take that first step, have that initial conversation with us, and then we can start helping you to kind of build in life insurance into your broader comprehensive financial plan. And then last but not least, I know that we have some repeat attendees for these Fit for Learning webinars. And just a reminder, if you haven't done so already, take a second here and you can go ahead and register for next month's webinar. We're going to be talking about investment strategies and finding the right investment strategy and using the right investments for your goals and objectives. So be sure to join us next month. And other than that, I just want to thank you all for taking a few moments out of your day to be here. As a reminder, keep an eye out for that follow-up email from us where you'll have a copy of this recording and you can go back in and reference anything that you might have missed, and you can use that email also as an opportunity to set an appointment with one of our consultants. So thanks again, everyone, for your time. Best of luck to you and have a wonderful rest of your day. Bye-bye.